Every day, the price of cryptocurrencies hits a new low. The biggest cryptocurrency in the world, Bitcoin, has dropped to $20,407 as of June 15, its lowest level in 18 months. It has decreased by almost 60% so far this year. Ethereum, the second largest cryptocurrency, dropped more than 25% to $1,040 in the meantime. According to CoinMarketCap, the global cryptocurrency market has decreased from $1.02 trillion to $983.72 billion, an 11% decline since Monday. Recently, all of the major cryptocurrencies have been trading in the red, putting even long-term investors to the test. In this video, we explain all the reasons that triggered the great crypto market crash. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. After Bitcoin's price dropped to a 3-week low of $18,200 on October 13, cryptocurrency prices are sliding once more. What is driving this new wave of selling, though? A hotter-than-expected consumer price index report that showed consumer prices increasing by 0.4% in September is the most likely explanation for the day's problems. Consumer prices are currently 8.2% higher than they were a year ago, according to statistics from the Bureau of Labor Statistics. Similar increases were seen in other categories as well, according to the CPI report. When food and energy prices are taken out, the core CPI has increased by 6.6% annually and by 0.6% month-to-month since September. During this time, non-farm payrolls increased by 263,000, while the unemployment rate fell to 3.5%. In other words, the last thing the Federal Reserve wants to see is growing inflation. The higher-than-expected data from October 13 is anticipated to result in another round of 0.75 basis point rate hikes in the coming months because the Fed's rate hikes are intended to cool off the economy and curb excessive inflation. The price of Ether and Bitcoin also fell in response to the article, falling 6% and roughly 5%, respectively, before recovering the majority of their losses in intraday trading. Since BTC and Ether are trading above their daily lows, it is likely that traders were prepared for a poor CPI data and that the bad news flow was already factored into the market's price. The Dow and S&P 500 also suffered losses after the CPI news, much like BTC, but both indexes are expected to end the day in the black with gains of 3% and 2.72%, respectively. The short-term response to the inflation report may give day traders hope, but the overall economic outlook is still gloomy. Additionally, given the strong correlation between the cryptocurrency and stock markets, the price of Bitcoin could fall even further if talk of further interest rate hikes starts to dominate news headlines. Mid-October also sees a number of economic developments that could keep the pressure on cryptocurrency values. Important economic milestones that historically had an effect on investor sentiment in the cryptocurrency market are highlighted on the calendars below. Both the Q3 earnings season and the Personal Consumption Expenditures Price Index start on October 17, respectively. The strength of the US dollar and what seems to be a major escalation in the conflict between Ukraine and Russia continue to weigh on all markets in addition to these scheduled events. Let's look more closely at 3 causes for the ongoing decline of cryptocurrency prices in 2022. Federal Reserve interest rate hikes. Raising interest rates makes borrowing money more expensive for both individuals and companies. The cost of doing business, the cost of goods and services, the cost of production, the cost of labor, and eventually the cost of almost everything will all go up as a result of this. The United States Federal Reserve is raising interest rates primarily as a result of high, unabated inflation. And Bitcoin and the larger crypto market have been in a decline since rate rises started in March 2022. Risk assets typically communicate or move earlier than stocks when monetary policy or metrics that gauge the strength of the economy change. The Fed began indicating that it will eventually raise interest rates in 2021, and evidence indicates that by December of that year, the price of Bitcoin had dramatically corrected. In a sense, the stocks market's future was predicted by Bitcoin and Ethereum, which served as the canaries in the mine. Risky investments like Bitcoin and altcoins might once again be the canaries in the coal mine, by reflecting a return of risk on investor mood if inflation starts to decline, the health of the economy improves, or the Fed starts to suggest a pivot in its present monetary policy. The persistent threat of regulation. Because of numerous misunderstandings or skepticism regarding the actual use case of digital assets, there is a lengthy history of friction between the Bitcoin industry and regulators. Different nations and jurisdictions have a variety of inconsistent policies on how cryptocurrencies are classed as assets and precisely what constitutes a lawful payment system, because there is no operational framework for the regulation of the crypto sector. Many observers think that until a more broadly accepted and understood set of legislation is passed, the mainstreaming of cryptocurrencies cannot occur, since the absence of clarity on this issue hinders growth and innovation within the industry. Investor sentiment has a significant impact on risk assets, and this trend also applies to Bitcoin and other cryptocurrencies. The possibility of unfavorable cryptocurrency regulations, or, in the worst-case scenario, a complete prohibition, has, to this point, a nearly monthly effect on cryptocurrency prices. Scams triggered liquidations and repeat blows to investor confidence. Cryptocurrency values fell precipitously throughout 2022 as a result of scams, Ponzi schemes, and extreme market instability. Due to a lack of regulation, the industry's youth, and the market's size relative to stocks markets, bad news and events that threaten market liquidity frequently have disastrous effects. The collapse of Terra's Luna and Celsius network, Three Arrows Capital's 3AC, misuse of leverage and client funds, and Terra's implosion were all factors that caused sequential drops in asset prices in the cryptocurrency market. Currently, Bitcoin has the highest market capitalization within the industry, and traditionally, altcoin values have tended to move in tandem with the price of BTC. Due to numerous Terra-related liquidations, the price of Bitcoin dramatically corrected as the Terra and Luna ecosystem crumbled, and investor confidence plummeted. When Voyager, 3AC, and Celsius went under, the same thing happened, but at a far higher extent, wiping out tens of billions in investor and protocol monies. Should you buy the dip in crypto? Crypto investors should exercise extreme caution while buying the decline. When asset values fall as quickly as they have in the cryptocurrency market recently, it can seem like a great time to buy that coin you've been eyeing. However, veteran Wall Street traders have a maxim that perfectly captures situations like this: never try to catch a falling knife. You should be able to imagine that buying the dip, or catching a falling knife, almost invariably results in agony. That is not to imply that knowledgeable investors cannot profit quickly by trading during periods of increased market volatility. However, the key takeaway is that sudden, significant market movements can be uncomfortable for the average retail investor. What to expect for the rest of 2022 through 2023? The Fed's ability to raise, pause, or cut interest rates will continue to have a direct impact on the price of Bitcoin, ETH, and other cryptocurrencies. This is because the reasons influencing declining prices in the cryptocurrency market are driven by Fed policy. Investors' appetite for risk is likely to remain subdued in the interim, so prospective cryptocurrency traders may want to hold off until there are indications that U.S. inflation has peaked and the Federal Reserve starts employing language that suggests a change in policy. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.